before you guys get started. But welcome everyone. This is the first home buyer workshop of the year for us. We're very excited. We're excited because this is the first step. This is the first step to all the other workshops that we have throughout the year that deal with homeownership and wealth building and accumulating assets and living an awesome life. This is the fundamental basic one. And you're here because you want to learn. You want to learn how it's all done. And this is what we're about. We're about education. So we really want to educate you on the process. That way, you know that it's not hard, you know that it's attainable, you know that you can do it. Everyone here on this call knows somebody who owns their home or who owns several homes or real estate. And it's completely possible. I've never met anyone who has ever came into my office and said, well, I wish I would have waited 5 years to buy or 10 years to buy. It's always the opposite. I wish I would have known earlier that it was this easy. I knew that I wish I would have done it earlier and started accumulating wealth and all these assets that you could through real estate with one property at a time, but it always starts with your first one. So I just wanted to jump on and congratulate everyone on taking the first step, which again, it's education. We want to educate ourselves on how everything works. Once you educate yourself, it's not as scary, right? And it gets a lot easier to do. So I hope you guys ask a lot of questions. I hope you guys take a lot of notes. And that way, not only you can empower yourself to buy a home and start living a great life because you're creating wealth at the same time, but you could educate other people, family members, friends. If you learn this stuff good enough, which you can, as long as you take notes and just go through your notes consistently, you could educate people in your life, and then they're going to thank you down the road. And that's one of the biggest things why we do this. All the realtors on here, that your realtor that invited you here, the reason why we do this is because it feels good when people come and to you 5 years down the road, 10 years down the road, 20 years down the road, and they have hundreds of thousands of dollars in equity. Their financial future feels a lot better than it was before. So that feels good to us. We like that feeling. So hopefully you guys enjoy, and hopefully you guys take notes and really learn this. And that way you could pass it, pay it forward to people in your life as well. So thanks, guys. Learned a lot, and we'll see each other soon.
Awesome. Thanks, Voltaire. I really appreciate your insight on this. So yeah, let's go ahead and get started. Without further ado, my name is Raul. I'm Raul, the realtor over here at Lepe Tendwell Properties. My main job is to help buyers like yourselves guide you through the process and help you find your home. So let's go ahead and get this started here. So like Voltaire said, welcome to our first workshop of the year for the first-time buyer. So let's go ahead and meet the Lepe team. Who are we? So here we got Voltaire Lepe. He's the broker and CEO and our team leader here at Lepe Tendwell Properties. And with Voltaire, we also have Vanessa Godoy. She's our team support / office manager. And honestly, we'd probably be here all night if I was telling you everything that she did for us here at the office, but she's our team support and office manager. Then you have Claudia and myself, as well as John. He and I and Claudia are agents that help buyers, guide them through the process from A to Z. Eleazar Cruz, he's also an agent, but he's also our project manager as well. So he manages a lot of projects that Voltaire has going on around town to help him with that. And that's the Lepe team. So let's go ahead and talk a little bit about what's happening in this real estate market of ours. So there's a lot of things that are going on, and there's a lot of speculation. There's a lot of people who are lending an opinion. So what we want to do is lend a professional opinion for you guys, right? Not just tell you what we think is going to happen because we heard it from the neighbor, but because what we're seeing every single day here, grinding it out in the office and out on the field. So inventory, right now we're sitting at a little bit over 2,700 homes. We're actually down 6% from the last time this report came out, which was about 2 weeks ago. And what does that mean? That means that we're short on supply. We don't have enough homes here in San Diego. And to give you an idea, the average before COVID during this time of year was right around 5,400 homes on the market. So we're running right around 50% capacity in terms of inventory. Now in demand, this is how many escrows we had. So we had a little bit over 1,300 escrows last month, and that's actually up 16%. And Claudia and I, we were talking earlier today, we were just getting together discussing some of the clients that we're helping purchase a house. And we're just noticing that there's a little bit more competition, meaning that there's a lot more buyers now that are looking to purchase a home compared to the months prior, right? So that's telling me that everybody's out of the holiday phase. They're done with Thanksgiving, Christmas, and they're ready to get back into real life, the grind, the work, and hitting some of these goals in 2023. Market time, how many days it takes for this house to sell. So 2 weeks ago, it was 76 days. A house would sit for 76 days from the moment that you put that for sale sign on the front lawn to the moment that you hand the keys over to the new buyer. It would take 76 days to find that buyer, I should say. Now it's taking 61 days. So that's a pretty good decrease in the amount of time that it's taking to sell a home. Just to give you guys an idea, 60 days or lower, it's a hot seller's market.
For sure.
Thank you. It's a hot seller's market, right? That means that the sellers have a little bit more leverage to call the shots. So we're not quite there, but we're pretty much there. In terms of foreclosure and short sales, why is this important? Because that usually has a direct impact to the inventory that we have. And a lot of people, they're saying, hey, well, you know, the real estate market crashed, we're in a bubble, and they're comparing it to 2009 in that era. Well, in that time, they had over 8,000 people in a foreclosure short sale situation, and they had over 16,000 homes on the market. And so right now we have a total of 19 people in distress. So if you're looking for that deal, that foreclosure to come up on a deal, you're either got to be really good, lucky, and patient, or all three. So foreclosures and short sales, they're not going to come in the foreseeable future. New builds. 2019, 2020, on average, new developers are building about 6,600 homes, new homes. This is new ground up construction. And leading up to the crash, 2005, 2006, new developers were actually building on average about 16,000 homes, new homes from the ground up they were building. So overbuilding back then, underbuilding today. So that left us with a negative 125,000 housing shortage here in San Diego County. So that means that people need to start selling their houses. No, that means that you need to really get serious about buying a house. There's not really a right time to buy a house. It's yesterday. So go ahead and get us to the next slide. Perfect. So now that you know a little bit about what's happening with the real estate market, it's important for you to find the correct representation for you in your home buying journey. So when it comes down to a real estate agent, you're really going to find two types of agencies, a seller agent and a buyer agent. All that really means is that as your agent, we owe you as our client, if you hired us, right, the fiduciary duty to you and only you. What that means is that we uphold your best interest over anything else. So that means that when I have a client that says, hey, Raul, what do you think about this house? I'm looking at it in terms of, is this what you told me you wanted when we first met? Or am I going to try to steer you to a house that's going to pay me maybe a bigger commission, right? We don't have commission breath over here, and your agent shouldn't. So make sure that when you find your representation, they're not talking to you with commission breath, and they're talking to you because they really are looking out for you and your best interest. Find your representation.
Let me unshare real quick.
Yeah,
Sorry,
for sure.
guys. This is the, I don't know why it opened the non-safe one. So let me make sure that we are moving forward with the.
Yeah, absolutely. No worries. But representation is huge, guys. So when it comes down to finding a good realtor, you want to ask questions, right? And even when I get people that come and say, oh, well, I'm going to interview you and other people, I always tell them, okay, make sure you're asking the right questions. When you're going in to get a surgery, you want to ask the doctor, okay, how many surgeries do you do? How many years have you been doing surgeries? And if this guy's telling you, well, you know, I did the other one the other day, but before that, I can't remember my last surgery, you might want to find another surgeon. So if your agent's giving you the same answer, oh, well, maybe the last house that I sold was sometime last year, I can't really remember when, that might be a good sign to ask more questions to see if you have the right team behind you. So
Step one.
Yeah, step number one, once you have your representation, you're ready to get start looking at houses, you need to get approved with your home loan. So without further ado, please go ahead and hit the next slide. I would love to introduce to you Alfonso Delgadillo. He's a senior loan officer and the leader of the Delgadillo lending team. So Alfonso, go ahead and introduce yourself. Tell us a little bit about you.
Absolutely. First of all, thank you guys so much for inviting me to this first webinar of 2023, where we're going to make the dreams come a reality. So, thank you guys so much for having me. But my name is Alfonso Delgadillo. I'm a local San Diegan with the passion of helping one family at a time achieve the dream of home ownership. So I've been doing mortgage for over 16 years. I've helped thousands and thousands of first-time home buyers and families, period, buy their first home, or help them sell and refinance to get a bigger home or better home, whatever that is. But I do run a team just like Voltaire does as well. I got, I call my front end of the shop, Jameer, Alexis, and Pamela Estrada. These are the 3 individuals in my team that help me service every single family that has the intention to start the home buying process, where we educate you on, the different loan programs, different loan types, what really it takes to get your loan approved for then, go out and shop for that home, right? But once, you are pre-approved, you're shopping or out there, and your offer gets accepted, meaning that you go into an escrow, into a binding transaction. I have 2 phenomenal ladies that are on my team that I call my co-pilots, because they help me land the plane, or they help us close the transaction as smooth as possible. They do all the back end work, and their names are Amanda Espinosa and Jeanette Schultz. They both been with me for over 5 years. My team combines me together for at least 5 years. Everybody in my team's been on there, so we're very knowledgeable. What we bring to the table is the different loan programs that we offer. Also, having a team like Voltaire has, and like myself, it allows us to just service every single family, to the best of our abilities. And like, Raul said earlier, like, we don't have commission breath, okay? Like, we're truly here to educate you guys and take care of you guys. And there's a big staff behind us that will make that dream come true, should you choose to hire us or just interview us for the process, okay? But that's my team. Without further ado, let's move on to the next slide. Perfect. So if you guys are watching this right now on Zoom, or if you're on Facebook, please screenshot this right now. These are the most crucial documents that you guys all need to gather. I call it the 222 law, right? Because it's easier to remember. So just remember, we're always going to need the 2 most recent years of your federal tax returns, okay? So your 2 years of your tax returns. We need 2 years of your W-2s, or if you get a 1099 as a contract employee, right, you're going to get it, your 1099s, okay? We're also going to need your 2 most recent pay stubs. If you get paid through a payroll, you work for a company, or even if you own your own company, but you pay yourself a payroll, we need 2 most recent pay stubs, which more likely all of us get paid twice a month. So full month, 2 pay stubs. We are going to require also 2 months of your bank statements, okay? We do also want 2 forms of IDs. We need your driver license, social security card, passport. If you're a permanent resident alien, we won't want your permanent resident alien card. If you have a DACA permit, if you guys don't know this, please help us spread the word. Anybody that has a DACA permit, like the Dreamers, you guys can also own a home. So we will need that permit, okay? So in other words, as long as you have some sort of status here, you can buy a home, okay? And then if you guys have any 401ks, IRAs, mutual funds, stocks, bonds, and we're gonna use those assets, we will also require those, okay? Now, if you already own a home, but you wanna buy other properties, right? Or you wanna refinance a home, we are always going to ask for your most recent mortgage statement, your home insurance, so we can validate that what's on the credit report is actually your payment. So, it seems like a lot of paperwork, but it's very simple. This is all the paperwork that we all have at the tip of our fingers, or have access to it, right? If you guys don't know where to find your W-2s, call your employer, HR department. Hey, can I get my last W-2s for 2 years? Hey, can I get my pay stubs, right? You guys know how to access your bank account. Now, I do want to put this out there. If you are an employee, you work for a company, you don't own your own business, you're not a contract employee, 9 out of 10 times, we don't submit the tax returns to the banks. So if that's the case, we do a W-2 only program. But this is the most important documentation that anybody that's interested on just seeing your options, those are the documents a lender is going to require. I say this because there's some lenders out there that will just give you a pre-approval based on your word and your credit report. Watch out for that. You want to make sure that you're legitimately pre-approved, okay? So when you meet with a lender, right, to get pre-approved, the lender will review all of those financials that we just covered right now, okay? They'll look at your pay stubs, your W-2s, your bank statements, right? And if they see any red flags, anything that's out of line from what you're telling them on the application, they're going to question those things, okay? The lender will review your credit report and your scores. I can tell you there's about 70, there's a stat that says that there's about 60 to 70% of errors reported on credit report. It happens a lot with the Hispanic, Latinos, right? Like my name is Alfonso Delgadillo. My son, one day he'll be 18, he'll get his own credit cards, whatever. His name is Santiago Alfonso Delgadillo. So there's a highly possibility that my accounts will show up on his credit. His accounts will show up on my credit, right? So what we do is we review everything that's in your credit report to make sure it's accurate. Sometimes when you pay off a card or a credit card, it can take months before that gets updated and it shows zero balance, okay? The lender will actually also calculate, reviewing your financials and reviewing your credit report is the most crucial part. Why? Because the lender will calculate and determine your debt to income ratio. Remember that, debt to income ratio. It's not your credit score. It's not your employment history. It's not your awesome credit report that gets you approved. What gets you guys approved is your debt to income ratio, which means how much money household, whoever's going on the loan, makes gross a year and then monthly, how much money goes out every month in your monthly obligations. This is your minimum credit card payments, car payments, student loans, personal loans. We're not talking about our utilities or our cell phone or auto insurance or cell phone, right? These are stuff that gets reported on your credit report. If there's inaccuracy in your credit report, it shows that you have a $1,000 car payment, but you paid it off, you should let the lender know, hey, that's a mistake. I paid it off. Why? Because that will affect how much money the bank will lend you. The higher the debt to income ratio, the lower you're gonna borrow, okay?
And Alfonso, I'm sure that with the debt to income ratio, there are just so many factors that if we try to really do it at home, we're probably gonna, just have spaghetti brain at the end, so many different thoughts. So I would say that if you really want to figure out your debt to income ratio and you really are serious about purchasing a house, definitely sit down with the lender so that way they can help you identify your particular debt to income ratio. And that way you can ask them what you need to do to get better. That way we're using our resources, being resourceful instead of trying to do all the work ourselves, right? As we started off, Voltaire has a team, Alfonso has a team. Teamwork makes the dream work.
Absolutely, buddy. You got that right. So yeah. And like I said, all these appointments are 100% free of charge. There's no obligation. We'll get you educated, and then you decide when you want to move forward with the buying process, right? The pre-approval, it's free. Now, also, the only debt calculator considered in your application, and I can't stress this enough. I get it all the time. I don't want to get qualified, Alfonso, because I first want to pay off my car. I first want to pay off all my credit card. Don't do that. So if we have to do it, we'll let you know you have to do that. Sometimes when you do things like that, it actually affects your credit score. It goes down versus going up, right? And I don't care if you owe $50,000 amount in debt, I'm sorry, a year, or you have a $50,000 balance in debt. What the banks really look at is the total minimum payments reported on your credit report. That is your debt to income ratio, okay? And here's a good rule of thumb for everybody to remember. Let's just say that your household, whether it's your spouse, your wife, or a brother, is going combined, and your annual income, just for simple numbers, let's just say it's $100,000, okay, gross. You're going to be able to borrow between 4 to 6 times that income. So that's a good number to roll, okay? So if someone makes 100 grand, depending on how much monthly obligations they have, I'm going to be able to get them approved between 400,000 up to 600,000 loan amount, not the house, loan amount. So that's a good rule of thumb too, okay? If you're approved, the lender should and will provide you with a pre-approval letter, okay? And here's the options. A lender should and will give you more than one option, okay? So here's some of the most popular programs that we offer, okay? FHA, here's the big myth. You do not have to be a first-time home buyer, I'm sorry. You do not need to be a first-time home buyer to buy with an FHA loan. A lot of people to this day think that they have to be a first-time home buyer to buy with FHA. You do not. It only requires 3.5% down payment. You can borrow up to 56.9% of your debt to income ratio. You can go as low as 540 credit score, but you have to put 10% down. Okay, that's a pretty low credit score, but we still have an option for you. Okay, it's only for primary residence. It's not an investment. You have to buy it, move in there, and then later you can convert it into an investment, rent it out, and go buy something bigger, smaller, whatever you want to do. Okay, you are allowed to get co-signers such as your parents or your grandparents or a brother or sister, uncle that's not going to be living with you in the property. They do allow for that. Okay, and then all the money required, X amount of dollars is required to you buy the home, can all be gifted from a relative. Okay, those are the best benefits of FHA. Lastly, you can buy up to a fourplex with an FHA loan, which means you live in one and you rent the other 2 or 3 units. Okay, and that's a great way to start your real estate portfolio. And then the second program is VA, is for any active duty military or any veterans, anybody that was in the military that was honorably discharged, has a certificate of eligibility, and you're entitled to a VA loan. If you get in the military today and they send you off to a mission, 90 days, 3 months in the military, you're eligible for a mortgage. If you do not, you get in the military, 6 months later, you are eligible for a VA home loan as well. It does go up to 60% or more of your debt to income ratio. All we need is a 540 credit score, and it's 100% financing. Zero money out of pocket for a down payment. It is only for primary. You have to live in the place and you have to move in there. You cannot buy to rent. Okay.
Sounds like a free house to me.
It's a free house, brother. That's literally what it is. Like 100% financing. They have to move into it. Now, a year later, they can turn that into a rental and go buy a second home that they're going to live in with the VA loan as well. So the VA loan also is for multiple transactions, not just one. And then there's no limits. They can borrow as much as they can qualify based on their debt to income ratio. They also allow non-VA co-borrowers. They have to put a down payment. It's complicated. That's in a one-on-one. I'll explain it to you guys. But if you have your mom or your dad or your brother that were not veterans, but they want to co-sign, they do allow for that. Okay. And I already explained those eligibilities on there. You can buy also up to fourplex. Okay, no problem. Now, conventional financing. This is the first program ever invented. Okay, this is the traditional for first-time home buyers. 3% down. That's all you need. If you're not a first-time home buyer, you need 5% down payment. Okay. I'll answer the question in a second here, Claudia. If you want to buy an investment property, 1 unit like a condo, townhome, single-family home, a house, 15% down. All conventional loans require a 620 credit score. They only let you go to 50%. I say only, but it's still a lot. You can borrow up to 50% of your debt to income ratio, and it does allow for non-occupant co-borrowers. It's also ideal if you want to buy a condo or a townhome that they're not FHA approved or VA approved. This is a phenomenal product.
And just like the debt to income ratio, right, Alfonso, we don't have to sit here and memorize all of this.
No.
It's as simple as sitting down with the loan officer of your choice, and they're going to look at your situation and they're going to present to you the options that best suit your needs, right? So I don't want anybody to feel like you got to write all this down or memorize all of it. Definitely snap a picture like Alfonso suggested. But yeah, no, this is really good information. I'm just still, I mean, I've been selling houses for a while, but I'm still blown away at the VA financing, man. I like, that's just mind blowing.
You know what? And it's pretty sad, right? The VA does not have any education on when the veteran is departing the VA, right? The service to educate them on this product. There's very little education on this product. But if you guys know anybody that was in the military or is in the military, please help us spread the word. It's a free home and they deserve it. They kept their country safe. That's why we're in America. So, hey, help us out, okay? Now, cost of financing a home, right? So purchase price, down payment, it all depends on the program that we're doing right now, right? So purchase price is going to be dictated by how much your debt to income ratio is, how much you're going to borrow. The down payment, it's going to vary. You can buy with conventional 3% down, FHA 3.5% down, or VA no money down. Okay, and then the interest equals the cost of borrowing money, right? So obviously the banks lend you hundreds of thousands of dollars, and all they expect is that you pay them back, and you are going to have a percentage that you're going to pay them. It all going to be based also on your credit score, stuff like that. But once again, like Raul says, do not try to memorize this information. We can go on it in depth with you on a one-on-one. Okay, closing costs, fees and expenses paid by the borrower to close the deal, it can vary. I always tell people, as long as you have down payment money, we can also help you get the rest, right? But it's all going to be based on what you are buying, right? In the closing costs, you have escrow company, title company, the lender fees, real estate fees, attorneys, HOAs, etc. We will explain to those, Raul, Claudia, John, everybody in the Lepe Tendwell property team. They know this cost, and they'll explain to those costs in your buying consultation. I will go over them in your pre-approval as well, because we want to make sure that you are highly educated on this stuff, because it is important to know they do exist. I always tell people, whenever you hear free, run them out the door, because they're gonna charge you somewhere. Nothing's for free in this life, right, Ro?
Oh yeah, absolutely. No, for sure. And I'm glad that you touched on this, and you even brought up the representation, because you shouldn't be, as a buyer, figuring this out in the middle of escrow. Your representation should already have told you, hey, this is going to come up, so prepare for it. That way, when it comes up, you're not stressed about it. There's been some people who have talked to me and say, hey, I saved up for my down payment, I'm in escrow, and they're telling me I got to come up with closing costs. What's that? That's terrible. Don't be that. So cool. Thank you for going over that. Alfonso, go ahead and hit the next slide for us, please.
Yeah, and you want to address some of those questions, or you want to wait to the next slide?
Yeah, I think we should address them before
Yeah, let's do it.
Yeah.
So go for it, AD. So
I see here, Desiree, not sure why you can't hear. Okay, that's over. So now, can the co-signer already own a property? Great question. Absolutely, yes. Just consider, once again, that whoever's on the application, whether it's an occupant co-signer or a non-occupant co-signer, which means they're not going to live with you, but they have a mortgage or a rent, their debt is also going to be considered in the debt to income ratio factor. But yes, we have that happen all the time. The brother has a sister, then the other sister wants to buy, they all help each other, the parents jump in there. So absolutely, anybody can actually co-sign for you. Great question, Vanessa. What else do we have here? I heard there is a program through the USDA for properties 30 minutes outside any major cities with 100, phenomenal, with 100% financing. There is a USDA. Write that term down. Take a screenshot of the chat, or just remember USDA. For San Diego, I don't hold me to this to the top of my head, but for example, Jamul, it's a rural area, and Jamul has a program that you can buy a home in Jamul with 100% financing with the USDA program, right? I was in Imperial County, El Centro, last week, visiting some real estate offices. Brawley, El Centro, Brawley and Calexico, right? Those are areas. So there is some areas outside major cities, not too far away, like it says here in the chat, 30 to 45-minute drive, and you are eligible in those areas for 100% financing. And we do offer those as well, okay? We mentioned 3 of the basic programs that most people buy homes with, guys, but please understand, there's a lot more options. We just don't want to overwhelm you, okay? So great questions out there. John, you have a question?
Yeah, one more question. Somebody just wrote this to me. Can you elaborate for those that don't have a down payment assistance program, but they don't have a down payment amount, but the gifted amount, if somebody can gift them the down payment, can you elaborate on that for those that are asking?
Absolutely, yes. So down payment, let's say that you need 20 grand, $30,000 to buy home, right? And you're the favorite grandkid or the favorite son, right? And your abuelitos, your grandparents, or your parents want to gift you the money. That is 100% allowed. So which means is The different programs have different requirements as proof of the gift. For example, for FHA and VA, which are government loans, John, we're gonna need a letter, which we will provide the buyers. You guys will provide you the letter. It's a template already done, fill in the blank. I, Alfonso Delgadillo, I'm gifting my brother Raul, right? $30,000, and it's coming from my Chase account ending in 123. And then it says relationship. And then I put on there, he's my brother, right? And then I sign it, Raul signs it. And then I have to provide the bank proof that that money's been sitting in my account for at least 1 month, 30 days. And then I'm an eligible donor. Now on the conventional side, I do not need proof that the donor who's gifting me the money has the money anywhere. As long as they wire from a bank account to escrow, that's all we want. And we just want the same gift letter signed. So depending on the program, is the documentation that we're gonna require. FHA and VA, they want a little bit more documentation. Conventional, little to nothing. Only the gift letter signed by both parties, and that's it. Does that answer your question, John?
Yes, thank you.
Perfect. Yeah. Is it true that you can finance your down payment? Yes, it is true. We have programs, and we're going to come back in the near future with a class or a workshop just on down payment assistance programs, because that's a whole other topic. But I want you guys also to know today that if you guys don't have the 3.5% down or the 3% down or closing costs, we do specialize on closing costs and down payment assistance. And yes, you can finance the cost, the closing costs into the home loan. Correct. Great question, Vigana. Thank you. All right. So
Good
no more-
stuff. Thanks,
Good
Alfonso.
stuff, yeah.
I'm gonna
Awesome.
send you my $30,000 gift letter, cousin. for
Hey,
DocuSign.
it was just an example. I know it was recorded. It was just an example, buddy. Okay. Yo, you know what? I can still help you out.
I love it. I love it. Thank you.
Yeah.
Thank you. So how much money do you really need, Alfonso? Claudia and I, we were looking at houses today. We were searching all over the county for 600,000 homes, 3-bed, 2 baths. And this is what we came up with. There's one over here in National City on East 4th, a little bit over 1,000 square feet, 3-bed, 2 bath. I think we sent this one over to you a little bit earlier. Thank you, Claudia, for
What was the price on that?
this one's right at 600,000, and you broke it down for us. But just so people can take a look at the photos over here,
Okay.
this is what 600,000 is buying today. I get a lot of clients who come in as a first-time buyer, and rightfully so, they want to get what is theirs, right? And what they deserve, and what everybody deserves here is the house of your dreams. But we all got to start somewhere, right? And
Yeah.
so I want to show everybody what a $600,000 house is getting you today, and understand that even if you don't swing this one your first try, that's all right. Everybody can get in where they fit in. But Alfonso,
Yeah.
talk to us about
So
the
the
down
down-
payment projected closing
yeah.
costs. You ran this number for me earlier.
Yeah, so the down payment on an FHA loan is 3.5% down, so that's $21,000. The closing costs, lender fees, title, escrow, notary, inspections, impound account, the whole thing that's required for you to close on it. It's about 13 to 14,000 bucks. So the average sales price right now, like Raul said, this is what we're seeing on there for 600. You are going to need about $35,000 out of pocket to close on something like this beautiful home. Okay. Now, once again, it could be dope. It could be gifted to you from a family member. It could be, finance. There's options out there for you, but there is money needed. That's why I tell you guys, if you guys see it here free, run. There's nothing for free, because you do have to put some money out of pocket sometimes, or most of the times. But if you really truly don't have them, we are going to explain your different options. Okay. So this is a beautiful home. I mean, listen, a year ago, 6 months ago, we weren't seeing homes like this for $600,000. So it is the buyer's market. There's still a shortage of inventory. People are sitting in the sidelines. They're waiting for the crash, which I don't know if it's going to happen. It was at 19 homes in distress in San Diego, Raul.
19
homes. All these people that own homes, guys, refinance. They have an interest rate of 2 to 3%. They took advantage of that. It's gone. Their mortgage is pretty low. Rents are super high. We're not seeing many distressed homes. So take advantage of this home that Raul and Claudia are presenting to you guys today, because it's phenomenal. We weren't seeing this 6 or 12 months ago.
Beautiful. So we got a pop quiz for you, Alfonso. I don't know if we
Oh,
told you,
here we
but
go.
here we
Here we
go.
go.
All right, Claudia, lay it on
Yeah.
them.
Yeah, we didn't think you guys were gonna be this outgoing and ask questions on the chat, but some of them might be kind of repetitive, but it's always good to just ask them. So we'll start it off with, do you need a 20% down to buy a home?
Absolutely not. It's false. Okay. Unless you are buying an investment property and it's 2 to 3 units, then it's required 20% down. But no, if you're wanting to buy a home for you to move in, once again, FHA 3.5% down, VA 0% down, conventional as little as 3% down, or we help you with the assistance programs.
There we go. Like we talked about earlier, right? You can even finance your down payment.
We can even finance and down payment, correct?
Yeah, for sure, for
Yep.
sure. Cool, cool. Yeah, and we came up with these questions because we get a lot of these questions, right, with
Mhm.
these first-time buyers. So the next one is, what is the average income needed for a $600,000 purchase, like what we just saw over there on East 4th?
Got it. So the average income, and I want you guys to know the number I'm about to say is a big number, but here's the good news. It can be made up of multiple people. So husband and wife, kids, right? Or, brothers, sisters, we can co-signers, whoever's going to go on the application collectively for a $600,000 home. This is with minimum down payment. Okay, Claudia and Raul, minimum down payment. We need about $125,000 income. So $120,000 to $125,000 annual income, total W-2s. It can be one per. Listen, guys, I put 6 people on a loan, like literally husband and wife with their 4 children. They're all buying a big house. So there's no limit to it. So don't get scared by the number. As long as you guys are willing and able, we are going to help you. Cool.
I love it. It kind of reminded me of, how do you eat an elephant? One bite at a time, right?
Yeah, one bite at a time.
That's a big number to hit, but I'm just thinking about it. If I can just go back to my wife and say, hey, look, we each need to make, what is it, 62,500 each. Let's go, or whatever that breakdown is.
Exactly.
So that number, 62,500, is a lot less daunting than 125,000. Now everybody's
Right.
situation a little different, but it's awesome that you can combine it.
So now listen, I'm gonna throw this out there right now. Like somebody that right now works for $20 an hour, right? You don't think about it because you're like, I don't make that kind of money. Well, your gross income is $41,000 a year. So you get like 3 people that make $20 an hour, they're buying a house. So it's not that hard. Once again, we're here to educate you guys because I hope that you guys are liking this information, because we can get very creative and we'll guide you guys through the process. So yes, the income can be combined. 2, 3, 4, 5 people, right? So whatever it takes, whatever it takes. What are the top things that what are
Lower.
go ahead.
So the
Oh.
top things that lower a buyer's pre-approval amount. So say I'm making that $125,000. What are some reasons why that I'm making 125 hypothetically cannot buy that $600,000 home?
Because you drive a BMW, then you have the Escalade in the garage, and then you like to max out your credit cards. No, what really affects you, and that's why I tell people, like, because it happens to all of us, bro, right? Hey, but my brother makes this. We work together. Why did he buy the house for 600? I only qualify for 400 condo.
We'll
Well,
get those.
your brother doesn't explain as much as you. So it's all factored on your monthly obligations. So the more monthly obligations, right, the minimum payments that get reported in your credit report you have, the less that you qualify, and that affects your buying power. So that's really what it is. Okay.
Cool stuff. Thank you.
Yeah.
All right. What's the next one? Do you need to be debt-free to purchase a home? Do I have to wipe out all of my debt? I think you already kind of touched on this.
Yeah,
Yeah, please don't do that. Like if you're thinking like, I'm not gonna call them because I want to pay everything off. I cannot tell you, when you pay off an installment loan, remember this, installment loan, anything that you guys pay fixed monthly payment, like car payments, personal loans, student loans, all those things are installments, and you pay it off. When you pay them off, what happens to the account, Raul? It gets closed, right?
Yep.
So the next month it reports paid and closed. Anytime you close an account, it can hurt your credit between 30 to 50 points. So please don't do none of that until you actually come with us. We'll run your credit. And if you absolutely have to do it, we'll tell you that you have to do that, right? Same thing with the credit cards. We want you to have the most cash available because you may need the $35,000, right? And then you wipe off all your debt. Guess what? You didn't have to wipe off all your debt. And now you did, and you have the money to buy the house. So don't do it without talking to a professional. Hopefully it's us. By the end of this presentation, we gain your trust. You know, Lepe Tendwell Property, my team will can educate you on that. So no, do not do that without talking to us first.
Catch 22, you wipe out your debt, but now you don't have a down payment, huh?
Exactly. Yes.
And I think Claudia had one last question for you.
Yep.
Which is,
Should you find your home before you apply for a loan?
You know, I have mixed emotions about that. I think we all now go online and we start looking at stuff, right? So, and that gets us excited because you see that beautiful house, the backyard, pool, and that gets you excited, right? The truth is, the reality, no. You first want to know where you stand financially, then you go out and shop. It's like going to the candy store, but you got no money and you can't buy the lollipop, right? Like, I want that plot and you can't buy it. It's the same thing, right? We don't want you to be heartbroken. So the first step truly is to reach out to any of our Lepe Tendwell Property realtors, right? Partners there. They'll get you a presentation. They'll tell you what's out there. They'll kind of guide you. And then if you decide to move forward, to send it over to us, we'll get you pre-approved. And then you go shopping, you know, with John, Claudia, you know, Raul, Voltaire. They'll take you gladly shopping, but now you know you're pre-approved. Now you have that golden ticket, right? Like, I know if I like a home for 600,000, I can put an offer and I can be in that home in the next 30 days. But don't do that until you actually sit down with a loan officer and get pre-approved.
yeah, for sure. No, and like you said, you know, you're going to go home, you know, you're going to get your money. By the time you go back to the store, that lollipop's gone. Somebody else already bought it. Or you come to find out you can't afford the lollipop, right? So avoid the heartbreak. Make sure that you do your due diligence beforehand. But thank you, Alfonso, for answering these questions.
Yep.
Let's dive into step number 2. So step number 2, once you have your representation, you have your pre-approval letter. This is a really crucial step because that's when your agent should be emailing you properties that match your exact home buying criteria. And we specifically do it with our exclusive VIP home hunting service that we go over exclusively with the clients that hire us, right? But go ahead and go on to the next slide, Claudia. Some of the things that go into step number 2 is where we sit down with you, or at least your agent's going to sit down with you, and you're going to tell them exactly what you're looking for. So when I sit down with my clients, I ask them, hey, tell me exactly what you're looking for. I want you to paint a picture in my head. So when I drive by that house, I'm like, shoot, that's the house that Claudia told me she wanted. And I think of that person. When we enter your criteria into our powerful search system, it's automatically going to email properties that you want to see, right? And those are the updated emails of all the listings, right? And it's going to include things like short sales, foreclosures, for sale by owners, right? And again, that's all to show you the properties that you want to see, not everything that's available on Zillow, right? So go ahead and hit the next one. So your buyer agent should have a mission to help you secure the best financing. Us realtors, obviously, we're not lenders. And I couldn't do a loan for somebody if they asked me to do it right now. I'm not a loan officer. But I do see loans every single day. And your realtor should know what red flags to look for. They should be helping you find the home that suits your needs, negotiate the best price and terms for you, and do all of this with the least amount of hassle. You should be enjoying your process from A to Z, and your team should be executing at a high level for you to be able to enjoy that process. If you're finding yourself overly stressed, that usually means that you probably need to reach out to your loan officer. You probably need to call your realtor. Just tell them how you feel. Tell them the stress or whatever feelings you're feeling. And I promise, if they're doing a good job, if they're doing their job, they're gonna walk you through it. They're gonna make you feel better. And they're gonna advise you in a way that is gonna make sense for you. So now that we talked about step number 2 and we know exactly what we're looking for, we got your pre-approval letter, we got your house accepted, Claudia's going to go over the process of what happens between you getting your offer accepted and you getting your keys, all the madness that happens in the middle. Tell us, Claudia, what happens?
Thank you, Raul. So like Raul mentioned, once your offer gets accepted and it's fully executed, the first things that happen, well, when we open escrow, your contract we would have already negotiated your purchase price, your terms, and your possession date. Those things get negotiated right up front. And escrow is a third-party company that represents, it's mutual to the seller and the buyer. and their job is to follow what the contract says. So they keep it mutual between both parties. First day of escrow, we opened, and the buyer will have 3 days to make a earnest money deposit that demonstrates to the seller that you're earnestly intend to purchase the property, and that's when the property becomes pending on the market. Within that same timeline, the seller will have to provide disclosures. In the state of California, sellers carry all liability of disclosing everything and anything they know about the property. So they'll provide that paperwork, and we'll sit down with you, or your agent should sit down with you and review them and let you know what the seller wants to tell you or is telling you about the property. And within that same timeline, the first 10 days, we'll have to do our diligence on the property. That means you will have out-of-pocket expenses because you're going to hire a home inspector to come and give you a general outlook of the home. So the home inspector will let you know, how the roof looks, electrical, plumbing, just a general home inspection. And from there, he can advise you to, hire a second opinion on electrical work, on a roofer, and that's how home inspections get done. And with those home inspections, that's when we negotiate requests for repairs. Usually we look out for the major items and make sure that you're going to get a safe home. And from there, your other out-of-pocket expenses is an appraisal. So the bank will require you to hire an so an appraisal. The bank will require an appraiser to go and evaluate the home you're purchasing. They want to know that the money they're lending to you is what the property is worth. So that is also something that you pay out of pocket. And lastly, termite inspection. We're in California and most homes are made out of wood. So you do need a termite inspection. And all those things are not included in your closing costs. And for any reason you were to cancel, you would have to repay those out-of-pocket expenses. But your offer does come with contingencies. The contingencies is your right to cancel. So let's say you saw something in the inspection that you didn't like and it was a deal breaker, then you have the right to cancel based on your inspection. The contingencies again protect your deposit. So if you were to cancel an inspection, you lose your inspection money, meaning not lose it, but you paid someone to go and do their job, and you would get your deposit back. By day 17, we should already know if this is the home for you, and by then the appraisal would have been back. Your loan would be clear to close, and you can remove all contingencies. Once you remove all contingencies, you're telling the seller that you're moving forward to closing. So for any reason you were to cancel within the 25-day close, then the seller can potentially keep your deposit. Day 25, 30, then we're clear to close. Your loan docs will make it to escrow. You'll schedule an appointment with the notary, and that's kind of the last items to get your keys.
There's a lot that goes on. Thanks, Claudia, for going over that. But here's the good news. Like just about everything else we've covered, you don't have to remember all of this. Our job as realtors is to walk you through every single step. And the biggest thing with all of this is just to give you an idea of what to expect, right? The last thing we want is for you to be surprised that you got to pay an appraisal.
Yeah, and then we also wanted to remind you guys of the important things of not to do during escrow. You do not want to get fired or quit your job, and you do not want to run up your credit bill, because the lender will still take a look at your credit one more time. And don't go buying a car either. That will bring your debt to income ratio down as well. And do not make any large deposits or withdrawals from the bank account without consulting your loan officer first. So those are very much important to keep you in the deal.
Awesome. Yeah, no,
Yeah.
these are huge. So be on your best behavior at work, guys. Don't get fired if
Yeah.
you're trying to buy a house.
And this is key day.
My favorite day.
The celebration.
Yeah. Yeah, that's awesome.
Okay.
Cool stuff.
And now we're
So-
to Q&A.
Yeah, let's do it. Let's do it. I know we covered a lot. There's a lot of questions. So let's go down the list. Let's see. The first one we have,
I think
Joel or Joel, what about pulling out from existing property that I already own? And I'm assuming that this question is pertaining to using as a down payment for another home.
Yeah, so I mean, that's a great question, Joe. So yes, we do offer home equity lines of credit. We also offer what is called a HE loan and home equity loan. The difference between one and the other is that home equity line of credit is a checkbook against your equity. You only pay on what you use. The HE loan will give you the full amount up front once you close, and you start paying on the whole amount 30 days later. Okay, so yes, a lot of families are actually doing that right now. So we offer those programs where you can pull from your equity to go buy the next home. Okay, and I'll give you guys a little secret just because you guys are cool. We also offer down payment assistance programs for a second home, meaning that you're going to rent your condo, townhome, or your small house, and you want to buy something bigger. There is a program that you don't even have to tap into your equity. We'll finance 100% of that. So just don't tell anybody I said that, okay? But
That's
yes,
awesome.
you can get that, Joe. 100%. Great question.
Next question sounds like a realtor question. With so many buyers and low inventory in San Diego, what can I, as a buyer, do to stand out? Claudia, what do you think?
I definitely think having the right realtor would help. Definitely having an aggressive, someone that's gonna corner that listing agent that's not picking up. But definitely also the second thing you can do is having your, financials right, so you won't have to ask for a credit. That makes you a strong buyer in a very competitive market. And yeah, I just think I can come up with those two. Do you have anything else to add?
Yeah, for sure. No, I think those things that you mentioned are really crucial. I think one thing, a couple of things that I'll add to that is that as competition starts to heat up with these houses, you definitely want to have a realtor who's a gunslinger, meaning that who's going to call that listing agent immediately and not wait, because it's going to be one of those things where you're listening to a panel like here speaking, and you listen to speaker 1 and 2, and you probably forget about speakers 3 through 8, and then you remember speaker number 9 just because he happened to be the last one. So the listing agents are the same way. So if their phone is constantly blowing up, I mean, they got probably 50, 70 agents calling them on a property, then they're probably going to remember the first couple and maybe the last guy, but everybody in between is going to be a blur. So have a guy who's going to call them immediately once you say, hey, I'm interested in this one. Make sure that they call them. Another thing is that when it comes down to writing down an offer, you want to have an agent who's going to identify pressure points that are important to the seller, right? Price statistically is usually the third most important thing to a consumer. There's usually 2 other things that are more important. And you want to figure that out. So when you're talking to a seller, what's more important to them? Is it really the price, or maybe do they want to stay in the house for a little bit longer after the close of escrow, right? Do they want a really fast close or a really long close, right? These are all things that the agent should be doing to identify, or asking questions to identify, to throw into this offer to make sure that you got the right terms, right? And the last thing that I'll add into that is just shortening contingencies and having a really good, strong earnest money deposit. When Claudia was going over the escrow timeline, she talked about an earnest money deposit, which is your initial deposit going in. Rule of thumb is 1% of the sale price of the house. Now, if you want to get more aggressive and be considered a little bit more, try going 2, maybe 3% as an initial deposit of the sale price of the house. And that should make you stand out a little bit more. The reason for that is because if I'm looking at an offer as a seller and I see one buyer's telling me, hey, I'll give you 15 grand up front to hold, another one saying, I'll give you 5 grand. This one's putting a lot more skin in the game. I'm taking this person a lot more serious. They have a lot more to lose than the other guy. So those are some of the things that you can do as a buyer, I guess, you know, and an agent to stand out against the rest. And if anybody else, Alfonso, I don't know if you have any other ideas,
I
but
mean, these are all great. I mean, I think every home buyer should do exactly what Claudia and Raul just said. And I'll just put the icing on the cake, right? Like the cherry on the top is making sure that you guys work with a lender, get full pre-approved, right? Like one thing that we do different is we actually go an extra step and we submit your loan up front to underwriting, which means the bank. So there's no worry about will you get approved? What if this happens? What if that? So submitting a official approval with your offer, it's crucial. So, you
For
know, but
sure.
everything that Raul and Carr said, we're just on point. This is just an extra, like above and beyond, right? Like just go that extra step with the bank. You can do that. You know, we can help you with that as well if you choose to work with us. But it's crucial, especially as we see, you know, inventory going faster. We went from 75 days to 60 days, then maybe 45 days again. It's going to become a seller's market. You want to definitely stand out.
And not only that, Alfonso, which is a really good point, have the lender call the listing agent. If your agent is not having your lender call the listing agent to back you up as a buyer, saying, hey, this buyer that I have is a really strong buyer. Credit scores up really well. They have really good financials. They have really good reserves. And they're just selling you as a buyer saying, hey, you don't have to worry about the financing. The financing's locked in. That peace of mind goes a long way. So if you have a lender who's also involved, that's going to be huge as well,
Yep.
which I personally push on my lenders to make a call. I think Alfonso one time even sent a video one time, just took a video of himself, say, hey, I'm Alfonso, put a name to the face or a face to the name. And it works wonders. It works wonders. So that definitely. So let's move on to the next question here. If I am just one person and have no one else for me to get to $125,000, what are my options? What do you think, Alfonso?
Great question. It's all, I mean, that's why I don't want to put some numbers out there, but we did. So if you're not there, don't get discouraged. Okay. 80 to 90% of first-time home buyers start with a condo, maybe a townhome. Okay. So worry about what you have now and buy what you can afford today, right? Buying that condo is the first step to buying that house that you want 3 to 5 years down the road. So if you make $70,000, $80,000 or $60,000 and we qualify you for a 1 or 2 bedroom, buy that 1 or 2 bedroom. Okay. So do not get discouraged. Don't be like, okay, I'm going to wait to make $120,000 and that's 5 years later down the road or 3 years later. Well, the house or the condo that you could have bought today, it's 30, 40, 50, 100 grand, 200 grand more, right? So I always tell people the best time to buy a house is whenever your wallet allows you. So buy what you can afford today.
Yeah,
Good stuff.
and that's exactly what I thought when I read the question. It's more so investing in what you can afford and letting equity build in that condo townhome. We helped that family, Crystal, and Robert, you know, she bought a condo when she was single and once she grew her family, you know, she was able to sell it. They were able to get into a bigger home, and all that equity that she gained from just a condo helped her, you know, with a good down payment, and they're able to afford it comfortably. So don't underestimate the condo and townhomes. They're a great stepping stone into a single family home.
Yeah, and I encourage you guys to keep an eye out for our next workshops that we're going to have throughout the years, how to play Monopoly through real estate, how to trade into a bigger home, right? And this is how it's almost like house hacking. We're really teaching you how to grow your real estate portfolio and your wealth overall without necessarily having to increase the amount of income that you got going on. We have one of our clients, he's a plumber. I think he makes maybe 80, 90 grand a year, but the guy's about to retire a millionaire with 4 houses, you know? And so he did it by accident. So imagine if he had a real estate team that was actually guiding them, you know? So that's the power of real estate. It can really catapult you to the next level. So the next question is, do co-signers need to provide their 2 years federal taxes, or basically everything that the main borrower has to submit?
Well, yes, 100%. Like I said, anybody that's going to be co-signer or going on the loan period, right? They do need to provide those tax returns. Now, remember, everybody that's going on the loan, it's a W-2 wage earner. You work for a company, you get a pay stub. We don't need tax returns, just so your pay stubs and your W-2s. We always like to ask for bank taxes because there's some things that some clients don't even know they're filing for, and we like to educate them, right? But yeah, all the documentation is for all borrowers on the application.
Good stuff. Thank you. Thank you. All right. What is considered a large deposit or withdrawal? Does it depend on the current amount that's in the bank?
Great question. The different programs have different guidelines, but anything over 5% of your monthly gross income is considered large deposit. So you make $5,000, any deposit over $250 to $500, they're going to question, right? Now, it's not an issue, right? As long as you have enough money after the bank backs out those deposits, right? So if someone makes a cash deposit in the last 30 days or 60 days, and the banks, the underwriters see those, and let's say, for example, you have 20 grand in the bank, right? But collectively, in the last 2 months, you've deposited $10,000 cash, 500, 1,000. In the bank's eyes, you only have 10 grand. Why? Because they're going to back out the cash deposits. So those are considered, you don't want to make some large withdrawals. Large withdrawals were just thousands of dollars, right? Because you may need that money to buy the home. But it happens all the time. If you did this yesterday and you deposit cash, don't freak out. There's always a solution. Okay. So once you get educated by the lender or the realtor, or you're thinking about buying a home, stop any cash deposits. We don't care about direct deposits, checks deposits, transfers from mother's accounts. That is okay. What we only going to back out, or the banks are going to back out, is the collective cash deposits that you've done over the last 60 days.
And if you got your down payment under your mattress in cash, it's okay. You can still buy a house.
Yes.
You got to deposit it. There's some motions you got to go through, but you got to let the money, I think season is the term, right, Alfonso, where you got to sit for a certain amount of time before you can use it. So if you got 45 grand under your mattress, you can still use that. Just talk to your team to figure out what the best way to do so is. That way you guys can accomplish that goal there. So there's a follow-up question. Who's the best agent there? I want that person. Oh boy.
Oh, nice.
I hope you got the right person. What are important documents needed for business owners as first-time buyers?
Great question. Business owners, we're going to need your personal tax returns, and maybe you have a corporation or an LLC, a partnership. You guys know what I'm talking about. We do need your business tax returns. But other than that, there's the same stuff. So the only additional document that we need for a self-employed borrower is their business tax returns if they have a separate entity, meaning you have a corporation or a LLC, right? But some self-employed borrowers like landscapers, handyman, they just file their tax returns and they have what's called a Schedule C, okay? That's where you declare your income as a self-employed borrower.
Good stuff. Alfonso, thank you so much for taking the time to meet with us tonight, educate us, and answer all of our questions. I think it doesn't matter how long you're in the business, you always walk away learning something. At least
yes, right? I'm always learning, right? So thank you guys for inviting me. So it's always an honor. And like I always say, anything for the homies.
There you go. I love it. I love it.
Yeah, thank you everyone too for joining us on an evening, taking an hour of your day to learn about first-time home buying. I hope you learned something. If you don't follow us already on our social media page, Lepe Tendwell Properties, we always put on at least 2 seminar webinars classes a month, so feel free to go follow and stay in touch. You can also leave a review on our Google page or Yelp page if you enjoyed this class, and that helps us help other people and meet other people. So thank you so much.
For sure. Yeah, no, really appreciate you guys. I mean, the whole point of this is to get really good information in front of you guys and as many people as possible, because this is really information that can be life-changing. So if you guys can access that link that's on that chat for a review, just write down a little bit about your experience too. That would be really helpful. But what were you going to say, Alfonso?
I'm sorry, my camera's acting up again here, but where can they contact? I mean, if people want to talk to you guys, I mean, we're on that link that Vanessa just dropped, right? There's a contact number there, right?
I'm not sure if there's a contact number. There should be. It's in Google, but here, I'm going to drop. What was that?
Oh, no, I was saying, yeah, it's like our Google page, but yeah, we can add our phone number in the chat too.
Yeah, I think that's very important. I mean, I dropped my number
Yeah.
there, guys. Listen, we're not here with commission breath. Like I will say, I love that. I'm gonna steal that line from our old now moving forward. We just want to educate you guys. So if you guys really like this information, please go on the Lepe Tendwell property. It means the world to us and to them that you guys give us a review, give us some feedback. We want to keep doing these workshops and whatever you guys feel like we should work on as a consumer standpoint, let us know and we'll make it happen.
For sure, for sure. Well, like Claudia said, you guys probably want to go and eat some dinner. Thank you so much for taking time with us tonight. We really enjoyed our time
Yeah,
together,
great
and we
point.
hope to see you on the next workshop. You guys have a good night.
Awesome. Bye-bye.
Good night.
Bye, everyone.
Our pleasure, Joe.
Good job, guys.
How do I stop recording?
You're still on.
Let me see.
She